Hello and welcome to Explain the Charts. Today, July 15th, 2025, we're going to analyze the S&P 500, ticker symbol SPY, looking at both current news events and the chart data. Recent headlines indicate that the U.S. stock market is reacting to renewed tariff threats from former President Trump. We'll dive into how these potential tariffs on EU and Mexican imports are impacting the market. Also, keep an eye on upcoming consumer price data reports. These reports will give us insights into inflationary pressures resulting from businesses potentially passing on tariff costs to consumers. Furthermore, Q2 earnings season is upon us, with major banks like JP Morgan already releasing results, giving us insight into overall economic health. Let's now switch to the SPY daily chart for a broader technical perspective. Now, let's examine the daily chart for SPY. We can see a period of considerable volatility, particularly from March through April of 2025. There were sharp declines followed by equally aggressive rallies. This volatility seems to coincide with some of the news we saw regarding tariff concerns. There's some support around the 505 level from early April 2025, so keep that in mind. We then saw a strong recovery in May and June, leading to new highs. However, the last few weeks have shown some choppiness. Now, let's zoom in on the more recent price action to see the short-term trends with the 1-hour chart. Switching to the 1-hour chart, we can see a more detailed view of the recent price action in July. The trend seems to be consolidating. The recent price action has the hallmarks of a possible reversal, but it could be too early to tell. However, the 625 level appears to be acting as significant resistance currently. The price has tried to breach it multiple times, but it hasn't held. We can see a potential support forming in the 623 to 624 range. A break below this level could signal a short-term bearish trend. Let's narrow the focus on the 15-minute chart. Looking at the 15-minute chart, we can see some short-term trading opportunities within this range. We've seen a high of 625.20, a low of 621.14, with a series of candles bouncing within a tight range. Look to trade the price action between 625.20 and 621.14 for short-term gains, with appropriate stop losses outside that channel. Going forward, the key levels to watch are resistance at 625, potential support in the 623 to 624 range, with support levels down near 621, and support at 505 dating back to April 2024. A break above 625 with conviction would suggest a bullish continuation is likely, while a break below 623 could indicate further downside. As always, stay nimble, manage your risk, and be sure to follow Explain the Charts for further updates.